All right, what's up, mortgage coach Dave Savage again. I think this is my third interview today. Just getting serious here. I've got Ryan. Is it Erekson? Is that how we pronounce
Erekson,
it?
yeah.
Right on. So Ryan was referred to me by Shayla Gifford. She's like, you have to interview this guy. I mean, I guess how you're using mortgage coach, how you're being a mortgage ninja. Shayla thinks is going to make a great interview for the mortgage coach community. So pressure's on, brother.
Awesome.
So tell us a little bit about your mortgage practice.
I came from a tech background, started out in real estate, and I had bad experiences with lenders repeatedly. So I switched to mortgages about 6 years ago. And quickly after getting into mortgages, I realized that almost everything could be done better, in my opinion. I just didn't like the way things were traditionally done. So I constantly kept trying to find things I didn't like and figuring out better ways to do them quicker, just more efficient, just cutting out as many things as I could. And just progressively, I've added tools, like built my own processes and systems to make my business super efficient. It's amazing how smooth things go. I work less than 40 hours a week. So does my entire team.
Love it. And what kind of production level are you doing? How many loans did you do last month?
Last month we had 18 for 5.2. Last year we had 178 for 44 million.
Well, congratulations. That's great production.
Thanks.
And so when did you start positioning yourself as mortgage ninja? You know, if I went to your LinkedIn, I don't know if you're using that to brand yourself in other social medias, but I know in LinkedIn, you're positioning yourself that way.
Yeah, 100% because of the way I work. So I started out on a team with Becca Green, who's also a monster at Guild. I started on her team for my first 4 years, went out on my own, and then I started figuring out how to brand myself and landed on Mortgage Ninja after trying to figure out what to call myself because I knew it would matter branding myself. Last year was actually only my second year on my own off the team.
Well, hey, let's talk about that because I think that is a great way to get in the mortgage business. And Becca is not just a monster at Guild; she's one of the, biggest and most successful loan officers in America, and she's a mortgage coach. Yeah. She kills it with Mortgage Coach. Did you help her at all with the adoption of Mortgage Coach?
Yeah, almost day one on her team, I constantly kept trying to get her to use tools constantly. I tried to sell everybody in our branch on Mortgage Coach repeatedly, and now pretty much all of them use it.
Well, good job. I actually did not realize that you were on her team. When you said you've been in the business 6 years, I was like, wait, I thought you were new. No, it's 2 years that you've been a full-time loan officer. And prior to that, you were just getting a lot of experience. Yeah, Becca has created 80, or her team has created 80 TCAs in the last 30 days. So she's killing it.
Yeah.
And you're killing it. So when did you first start calling yourself the Mortgage Ninja? Like, what's the backstory on the name?
It started about 2 years ago after I first started building out my own system for running my business. I just got tired of trying to use CRMs to manage my entire business. So I started building out my own pipeline management system. And it's allowed my team and I to be insanely efficient. We do almost nothing twice and miss nothing the way we work. So it allows us to work less than 40 hours a week and do an amazing job.
Love that. And what about Mortgage Coach? Why Mortgage Coach? And when did you adopt Mortgage Coach?
Oh, man. The thing that I loved about Mortgage Coach from day one was all these conversations we have with people about finances and loan options and scenarios, all the advice we're giving them. We repeat these same things repeatedly over and over. And it just doesn't sink in deep enough. People just don't quite grasp it. And the second I saw Mortgage Coach put one together, the very first time I showed it to a client going over a refi with them, the very first time they looked at it, sunk in on a deep level, and they said yes immediately. So it just took all these things we're already doing, already saying, and just put a steroid shot in them. It just makes things make sense for
it's powering your value prop. You want to say, hey, my advice matters.
Yeah. Mortgage
Coach is doing that. So Shayla said you do an exceptional job of implementing tools and strategies. What are some of the other tools and what are some of the other strategies that you've built into your platform?
So one thing that works really well with how I do things and then pairing Mortgage Coach with it is my conversations with clients from the very beginning, starting about their life, their financial plans, what made them want to buy a house in the first place. So how I end up using Mortgage Coach is based on the conversations I've had with them about their plans. So if they're planning on purchasing a house, talking about why they wanted to buy a house, when, what they think that will look like, how long they think they'll have it. With a refi, just talking to them about their plans for the house, how long they think they'll have it, what it looks like now, talking about their finances overall. So these were conversations I was already having with people and just didn't have a good way to visually help them see what I was trying to tell them and the advice I was giving them. The mortgage coach solved that almost immediately because now I can visually show them easily.
I have to imagine you have watched this, but a couple of years ago, I did an interview with Shayla, and it was called Shayla Gifford's Perfect Purchase Experience, or the Shayla Gifford Purchase Experience. Do you remember that?
Yeah. Yeah.
Is that pretty much your process? Like, do you follow that pretty closely? And if you deviate from it, what do you do differently?
I took some parts from that. So when I have a brand new lead come in, I have 10 steps, 10 questions I go through with them, and none of them have to do with qualifying them whatsoever. It's just me getting to know them. It's more like I'm interviewing them and asking them questions that gets them to interview me. And I'm not qualifying them at all. That's literally just an interview back and forth before we ever get into talking about the actual loan specifics.
Any mind sharing some of those questions? Just, I don't
Yeah.
think we have time for all 10, but give us some highlights on what are some of the questions you're asking before you get into
Yeah,
it.
the very first thing I always ask is why they decided to buy a house. And then when they answer that, I ask them why they decided now. So that question is one of the most important things I ask up front. When I ask them why they decided to buy a house now or refinance now, it tells me or gives me insight into their thinking right now and how they're seeing things right out the gate. Just asking them why they wanted to buy a house, those answers are pretty generic. But asking them why they wanted to buy one right now gives me a lot of insight into where they're at. That's
That
one
is
of the most
definitely
valuable things I ask up front.
What about, do you ever ask how old do you want to be when your home's paid off and you're debt free?
Kind of. I start asking them just financial questions about their life. I ask them what some of their financial plans are. Most people don't have much of a plan financially. So I start off pretty basic and just ask them what their plans are financially so far. And I'll ask them 2 years from now, 5 years from now, what that looks like. Generally, they have no idea. And then I get to start talking to them about all of it and how this is a good foundation for it.
I want everybody to pull from that because what he's doing, it's beyond the transaction. I mean, there's questions you have to ask to do a transaction. Every loan officer is going to do it. It's going to be the experience that every family gets. But when you are asking questions, not just for the sake of going beyond the transaction, but things that align with your advice, you will have more conversion. You will get more referrals. And then when you start going like, hey, what are your real estate goals over the next 5 years? Now you're positioning and how old do you want to be when your loan's paid off? Now you're really helping yourself so that when you show that total cost analysis, it's a map for them. I mean, you're giving them a compass and a map to achieve their goals. So you had something you were going to say there.
Yeah. So one of the most common things I get when I ask that question, people tell me their dream has always been to buy their first house and then start to buy rental properties after that. That's by far the most common thing. The most common response I get from people is that they would like to own rental properties eventually. So before they've even bought their very first house ever, we're already having conversations about how to properly align what they're doing. Step one, how to prepare for the next house after they buy their first house from the very beginning.
Dude, you are a modern mortgage professional. This is the way it rolls. So before we break down some of your scripts and get into some specific mortgage strategies, what other tech is powering your Mortgage Ninja platform?
I use Homebot a lot, and it connects nicely with Mortgage Coach now. Homebot, just the fact that it's giving something valuable to people every single month is amazing, and it pairing with Mortgage Coach makes both of them even stronger. Homebot for me just keeps me in front of people.
It's a great platform for anyone that's listening to this and you don't know what Homebot is. Homebot.com. If you have it and you don't have the Mortgage Coach integration turned on, it takes less than 30 seconds to turn it on. And I'll make sure there's a link in this video to make sure you know how to activate that integration. What about, I mean, I think the Homebot value, post-closing, past customers, very obvious. A lot of folks do it. But are you doing it for pre-approvals at the point of sale to add value? I think people should do that, but I don't see a lot of loan officers doing that.
Yeah, I actually do. So when the application is completed with my team, we immediately add them as a buyer in Homebot. So they start getting market info sent to them. And as soon as I know roughly what their purchase price is going to be, I'll put that in there. So now they're seeing relevant data on the market they're going to go shop. So like right now, Homebot's telling them right out the gate, it's not a buyer-friendly market. And it's telling them how long to expect the whole process to take. And it's not coming from me now. It's coming from a system they assume knows the market.
And for everyone, imagine, put yourself in the shoes of a buyer, and you got a total cost analysis showing you options, and it can be updated live. And let's face it, the incubation period from a consumer going, hey, I'm thinking about buying, to I'm in escrow and I'm buying, it's harder than ever. Like, that's a longer incubation process. So TCA plus Homebot for pre-approvals, super smart, super slick, and I'm sure it saves you time. So let's walk through your mortgage coach for a purchase experience. Kind of
Okay.
give us a high level overview of what that sounds like, and then what do you call it to a consumer? Do you call it a total cost analysis? Do you call it a mortgage coach analysis? What's the words that you use?
I don't generally call it a total cost analysis because that goes way over their head a lot of the time. I tell them it's just either like loan scenarios, loan review, something like that. That's a little easier to digest instead of the total cost analysis. After that, I'll say like loan review in the email, but I'll put total cost analysis next to it. So from there on, I can just start referring to it as the TCA. And for branding, it works, but not initially.
No problem. And when do you do it? Do you do it, before they have filled out their online app? Do you do it after? Give us just kind of your perfect purchase experience. When do you do it, TCA? And then at some point, pull one up and let's walk through it.
Okay. So after the application is done with my team, I have somebody on my team who does a very in-depth review of the app, and they basically make sure there's no questions left unanswered. So after that, I have everything I need to be able to accurately create the TCA. So then I create it. So while my team is working on getting all the docs in and working on the pre-approval, at that same time, I'm going in working on the TCA and talking game plan and strategy and scenarios with a client while my team's working on their pre-approval. So there's still things going on.
So
they're not just sitting waiting.
So they're doing everything that has to do with transaction,
Yeah.
and then you're doing the advice piece. And and community, I've interviewed countless loan officers. We have a playlist on how different top producers use mortgage coach, and there's no one way. Jeremy Forcier does what you do. His team does everything, and he does mortgage coach and realtors, like makes it rain with realtors. And he has the mortgage coach conversation, everything else team does. But a lot more big teams have a production partner that sets up the TCA. How does Rebecca's team do it? Does everybody on the team create the TCAs?
Yeah, the individual loan officers on her team do. Her team's kind of set up sort of as like pods. They'll have like a sub LO and then an LOA that's paired with one or two or three of them, and they all kind of work as a team. So they'll have the LOA created, and then the LO on her team reviews it.
Got it. Okay, cool. Just curious about that. So what story do you want to tell? Like, let's talk about a family that you've recently helped. Let's do a couple TCAs. I do know I'm going to want to do a debt consult because you mentioned.
Yeah, I was just going to say that one was my favorite one so far.
So let's do a purchase one, and then we'll go to that one.
Okay. I'll pull it up real quick.
And guys, if you have questions, put them down below. If you're listening to the recording and you still have a question, we'll make sure it gets answered. But we do have a bit of a Facebook audience. So for that Facebook Live audience, any questions, put them in there and I'll make sure I get to them.
All right, so here's a purchase one I did recently. This is a borrower of mine who's buying a new build, and we compared all kinds of stuff. We compared doing a long-term lock or waiting, different down payment amounts. He's VA, so we compared doing down payment versus not, all kinds of stuff, and him digesting all of those different scenarios and ideas would have never worked without Mortgage Coach, because I could just go in and change things constantly as our conversations changed.
Cool. Well, let's take a look at it.
So this one, what we landed on.
Let's just go to the actual presentation. Okay. And it looks like that's how you usually go. You notice he clicked in the upper right-hand corner so that it immediately went into a live experience. Do you use that live feature very often?
Oh yeah, always. I pull this up while people are on the phone with me or on Zoom and go over it with them.
Okay, so walk us through it.
So typically how my workflow goes is I'll explain what the options are on here, why I chose them. So in this case, I explained to him that I put 3 different rate options on here. We decided we were going to do a long-term block since it's a new construction. So I told him I had 3 different options in here, 3 different rates, 3 different costs, and we were going to go weigh the pros and cons of each and figure out which one fit his plan the best based on just overall cost savings and him planning on being in the house for a minimum of 3 years. So what we landed on was just buying the rate down as far as we possibly could, even though the upfront costs were higher. So him and I went in and figured out about where our break even is. So I set this one where the savings is 36 months based on how long he knows for sure he'll be there. And I figured out at what point he'd break even on that lower rate on buying it down to 2.375. The monthly payment was the most important thing to him out of all of it. He didn't care if upfront costs were higher to get the lower payment because he plans on keeping it for a while. So I just set this to be his break even, showed him that. Down here, I always show principal paid. Occasionally I'll flip flop it and show the interest savings when I'm comparing interest rates, but I like to show principal paid so people see how much money they're getting to keep because of the option they're choosing.
One suggestion there is if you're showing purchase price options, or you're doing a cost of waiting analysis, or you're doing a rent versus own, I would always make that the net worth over time, because then they can see, hey, at these different purchase prices, look at how that, the loan costs are one thing, but the net worth over 10 years is another.
Yeah.
So just think about that for those specific scenarios.
I actually used that a couple of weeks ago with a client who was trying to decide whether to put 10 or 20% down. So we took her current investment and did the net worth with the house and her current investment portfolio that it was in. It was cool.
Yeah, that's super powerful. Have you done any move up analysis where you show families the benefit of moving up?
Yeah, I actually have 2 agents I'm working with currently where we built out an entire farm we're marketing to based on move up buyers. We had a specific criteria we went and got farm information for so we could go try to market to these people.
Have you watched the Amber Kovark appraisal gap interview?
No, I actually haven't on my watch list, but I haven't yet. I really want to watch it. It looks really good.
Well, by the way, I want to show something on my screen real quick.
Okay.
As we have a playlist, and it is called the Agent Advantage playlist. And every one of these interviews is a loan officer, a mortgage coach, someone that's created over 1,000 TCAs. So they're all red belts, and they're not saying what company they're with, but they're talking to realtors. Like this was part of the content and presentations at the Modern Real Estate Summit. So you can hear Amber, talking about how she's helping buyers with appraisal gaps. And so anyways, just want to make sure everybody knows about this. It's at the very top of our YouTube channel. So this is the first playlist you'll see. Highly recommend, I would recommend you check all of these out. They're all under 5 minutes and they're all just super tight presentations.
Yeah, they're incredible. I've watched and used all kinds of stuff from those. Amber's is the only one I haven't watched yet.
Cool. Well, hey, let's share your screen and get back. And then I don't know if you're done with that TCA and you want to show the cost of waiting, or you got more to talk about on that one.
No, that was it for that one. Did we want to do the debt consolidation one or another one before that?
Yeah, let's do.
I think another one that would be valuable to show is the same payment with cash out.
Okay, let's do it.
Cash out's becoming a little more valuable with less rate and term happening. All right, so this client, basically what I did with him is he wanted to just pull out money, just in the beginning for the sake of pulling out money, which I told him was not a good idea. So we took a look at his finances, his debts, and tried to figure out how we'd actually use that money if he pulled it out. But our goal was to keep his monthly payment exactly the same. So I went in and structured this in a way to show him how much money he could pull out, keep his payment exactly the same as it is now, and go pay off some debts. So for his, we went in and structured the first one as a brand new 30-year loan with him keeping the payment almost exactly the same within $8 and him pulling out about $20,000. And he's going to use that $20,000 now to go pay off debt. But when we started this, he wasn't quite sure what he wanted to use it for. So this is a conversation I've had with a lot of people, keeping their payment the same, dropping the rate if it makes sense to. In his case, we're still dropping the rate 1%. So he's still saving a ton of money. But going in, pulling money out, keeping the payment exactly the same, and doing smart things with that money. So whether it's investing it somewhere that it's going to grow or paying down debt, things like that. I've sent out a marketing piece based on this that's worked really well over the past year, helping people figure out how much money they could access in their equity, keeping the monthly payment the same. And then just from conversations about his finances, we considered doing a 15-year, but he decided to not go for 15-year. So we actually just closed this one about a month ago. We got a little over 20 grand, and his payment's exactly the same.
Love it. And super smart. Remember, guys, if you have questions, put them down below. But I love how you're tailoring it. You're showing monthly. You're showing the savings over 36 months. I like how you made it red. So instead of showing the savings, you're showing the cost. So I mean, you're right. This guy's a ninja. Just little subtle things. And in the bottom right-hand corner, it looks like he decided to show net worth on this one. Scroll down. Oh no, you did interest paid over 10 years, but it 1 year, 3 years, 10 years, mortgage ninja.
So this one, I wanted him to understand that there were pros and cons of it. So I showed him the negative cost mortgage wise, and I use that as my tool for helping him understand that he needed to have a plan for the money, not just blindly pull out money just for the sake of pulling it out.
Yeah,
so
no, love
the negative helped that conversation.
So let's see what you did with a debt consult.
Oh man, this tool is so cool. All right, so this one, guy called me, past client, just wanted to pay off some debt. He'd racked up a whole bunch of credit card debt after he bought his house, mostly on things for the house. So I told him we could look at doing a cash out, paying some debts off. And then right in the middle of my conversations with him, the debt consolidation tool came out and made that conversation 1,000 times easier. So what I did is I just had him go get me this super basic information. I told him I needed to know what his balances were, his rates, and then I helped him figure out what his minimum payment was. And then because of that, I got to not just go in and show him how much money he could pull out and put towards credit cards. I got to show him how that was actually going to affect his overall finances. Like just the amount of money he could pull out is incredible. But being able to show him the monthly savings, interest savings, all of that all combined by doing this made it so much more powerful.
Hey, go to the bottom and click on the debt consol module. So go to the very bottom and you see where it says debt consol right under payment stream.
Yeah.
Which one of these did you walk him through? You know, what did you use to explain it to the client?
The way I started was showing him the cash out first because I'd already done it, and just showed him how much cash he could pull out and just kind of roughly estimated how much his monthly payment would go down. He was sold on it because of the monthly payment. So I used this to show him that, and then the payment table. That was the first part of the conversation because that was the part that was most important to him. And then after that, we got deeper into the interest savings and how much he was going to be saving financially overall because he was doing this besides the monthly savings. His $800 a month savings, he's actually putting half of that back towards his mortgage now, which we
did you show that in Mortgage Coach where, hey, what if you took that 400 and applied it to your principal?
Yeah, I went into the reinvestment strategy and showed him what that would look like.
Which one is that? Which option is that you did that in?
It's not in there now. I showed it to him live and then took it back out.
Okay, got it. So make sure everybody knows, super important move when you're showing debt consol and taking that monthly savings. You know, you could show, hey, what if you put some of it to prepay your mortgage? How much faster would you pay it off? How much interest would you save? Or what if you took that money and invested it? And you could do both. Like it was $800. You could have said, hey, what if you put 4 in savings, interest-bearing savings, and 400 a month in debt reduction, and it would show it all.
So our compromise through all of this that I got him to agree to was him, before we submitted his loan, determining with me how much was going to go into savings or somewhere that would help his finances, and then him budgeting the amount that he could just go spend because he was making a good decision and saving his money, helping him balance those two. He was super excited about it. And he's actually making those extra payments now. He's committed to it.
Well, again,
amazing to see.
You are doing all the right things. So let's close out. Go ahead and stop sharing your screen. But I would love, first of all, how long does it take for you to create one of these TCAs?
5 minutes or less with all the templates set up.
So we're getting ready to roll out. Well, not ready. We rolled out the debt consol, but we're trying to tell stories. So I might have someone on my team call you and do another debt consol case study. So be on the lookout for that. How is the integration with Homebot helping you? Tell us a little bit about that.
Last year, just the middle of refi mania, it made getting refi options out so fast. This is one thing that Shayla actually took away from our meeting that I was on with her, being able to go into Homebot, open up the client, and right there click on the create TCA or whatever it is. Homebot automatically pulling the information for the client, creating the TCA, inputting all the information from Homebot, so I can just go and choose templates and I'm done. Made it take 1-2 minutes to put TCAs together for just simple rate and terms.
That's a little bit of a, like, we created that button for the consumer, but it's funny, you're about the third or fourth loan officer that I've
Oh yeah, I use it for myself.
You know what? I love it when the consumer surprises me and I have a lead in Mortgage Coach that I didn't know about it, but
Yeah.
if they didn't, I am starting my refi TCAs at Homebot, so so that's kind of your move. That's your ninja move. And what do you think that saves you, like 1 or 2 minutes?
Yeah, more than that, it's just the mental energy having to go in and just structure them from scratch over and over. Because I'm going and choosing a template, putting my 2 options in, I'm done.
Beautiful. So
it takes away a lot of the barrier, just wanting to do the work or not.
Yeah. So anyone listening to this who's taking more than 3 to 5 minutes to create a TCA, do what the Mortgage Ninja is doing. Use templates, use your integrations, just look for ways to save a minute here, 2 minutes there, and that's awesome. So any closing thoughts for the Mortgage Coach community? You're talking to loan officers who want to be advisors. Any closing words you have for everybody?
Yeah, just leverage everything you can, like people, tools, processes, like know your business really well. Use these tools to help you be better at our job. Like our job is to be really good loan officers and give good advice and coach real estate agents and be business partners. And all of these tools and like understanding processes, keeping those things simple, like having a team that can do all of these different pieces for you allows us to do what we should be doing. Having conversations with people about purchasing, about refinancing, about their finances. Those are the kinds of things we should be doing, not spending time just running in a circle, chasing our tail repeatedly. Like use every tool you possibly can and don't ever settle with what you already have. Constantly look for new things. Every week I do things for my team.
Well, congratulations. I mean, you've gone from being on a team for 4 years, the Back of Graham team, which is an amazing team out of the Vegas market, to having your own platform. And in 2 years, I mean, you've built a team. So congratulations. I'm looking forward to watching you scale it and become one of the, accomplish whatever your goal is. Not everybody wants to close over 500 loans a year, but whatever your goal is, I look forward to seeing you hit it. And then I look forward to having you as a guest on the Mortgage Coach YouTube channel again.
Yeah, absolutely.
All right, Ryan, have a great day. Everybody, if you got value, give this a like, share it with your mortgage friends. Take care, Ryan. Thanks for all the time.
Thanks,